Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, what a remarkable recovery it was in the last hour of trade. We saw the Nifty ending well above that 18,300 mark. So I think over 100-point recovery from day's low. And we have ended the May series on a positive note as well. We'll have to see how the June series kicks off. But of course, the old adage that sell in May and go away hasn't really held true, given the fact that on a month to date we've gained somewhere around 3% or thereabouts on the index. What was doing well in today's session was the realty pack and the FMCG basket as well, but the Nifty Bank Index also managed to stage an extremely good rebound, and even the metals basket that was in the red, and in fact around the midday it was down somewhere around 1.5%, but that also managed to end the day in the green. Let's take a look at some of the major gainers in today's session. It was Bajaj Auto, that stock hit a 52-week high. You had Airtel, you had ITC, that also trading somewhere around, that's also trading somewhere around 440 levels or thereabouts, a 52-week high for that counter as well. Divi's Lab, after yesterday's losses, it has made a comeback. Tata Consumer was the other counter that was among the top gainers on the Nifty. Aside of that, if you look at the Nifty losers, you had the likes of Wipro, Tata Motors on the back of that downgrade, the sell call rather coming in from UBS, and you had UPL, HDFC and Sun Pharma ahead of its numbers yesterday under pressure. But look at the mid-cap index as well. Yesterday also, in a weak market, it had held up, and even today it ended with gains to 3 to 4% or thereabouts. Yatin, let's talk about some movers in that space.
Yeah, so I think the mid-cap end of the market was quite interesting, and probably that is the reason why the market's advanced decline ratio was on the better side. On the gaining side, we had NCC, which moved nearly 9%. As far as Sanofi is concerned, they had announced a demerger. After a few days of consolidation, again the stock has moved and nearly 6% up for that one. Aster DM, and that hospital chain, will be announcing their quarterly numbers, and ahead of that the stock is up nearly 6%. What was not doing well is BDL. Post the numbers, the stock is down 5%. IRFC, eClerx, Max Healthcare, all of these stocks looking at some profit taking. But clearly today, if you look at the stocks which were hitting fresh 52-week high in the mid-cap space, KPIT Technologies, C8, IDFC Limited, whole host of stocks which have done really very well. In fact, today Piramal Pharma, that stock was also in focus because they reported profits after 3 consecutive quarters of losses. And PPL Pharma, if you talk about that stock, ended up nearly 4-5% higher. Obviously came off from the day's high, but today's conference call at 5 p.m. will be quite important. Before that, the stock saw some bit of volume and price action.
Right. On that note, let's take a look at some of the stocks that are on our radar this afternoon. Starting with, of course, Tata Motors. At a time when everybody was thinking that the tide is turning for Tata Motors, most analysts are bullish on the stock. UBS, in fact, has come out with a sell rating on the stock, even though it has upped its target to 450 rupees a share versus 320 earlier. It's UBS is saying that investors are kind of ignoring the structural headwinds that are there in the stock, and given the fact that all the positives that we have been hearing from the company and about the company have already been priced into the stock. That is what UBS is saying. It says that the domestic market share for Tata Motors is already peaking with increased competition. It also believes that the launch pipeline when it comes to EVs and the other variants is also pretty much weakish when it comes to other peers like Maruti, for instance. And of course, the stock has seen a 20 to 23% up move on a YTD basis. It has outperformed the BSE Auto Index, but UBS believes that this outperformance is not sustainable, and that's one reason it has come out with a sell rating. In fact, it says that the performance was driven by an unsustainable product mix and minimal discounts, and which is why it believes that it's the right time to actually sell the stock. That's the view from UBS, and it expects JLR margins to decline to somewhere around 4% or thereabouts. Remember, the management had given a guidance of somewhere around mid-teens, but UBS says that it could be somewhere around 4% or thereabouts for FY25, FY26. Of course, it all depends on whether or not JLR manages to come out with good margins. That will be an upside risk to UBS's estimates. Well, this is one contrarian view coming in on Tata Motors, so that's one stock to watch out for.
Well, that's about Tata Motors, but Nandita, today the telecom pack was quite active in trade. In fact, today Macquarie has come out with a fresh new initiating coverage report on Indus Tower. They expect the stock to reach a target price of nearly 200, which means that in a bull case, or the way Macquarie has been looking at this stock, it would result in a 40% upside from the current market price. In fact, Macquarie believes that the long-term potential of Indus Towers remains intact. In fact, the stock is trading at the attractive 9% dividend yield. Obviously, the stock has been under pressure because Vodafone Idea is one of its key tenants, and given the fact that Vodafone Idea has not been really doing well, there could be some risk to the tenancies, number one. Number two, they have a lot of receivables from Vodafone Idea, because of which the stock has seen sharp derating in the past many quarters. So, let us see how really does the performance improve, whether or not there is a tariff hike in the industry which would lead to some improvement in financials for Vodafone Idea, because that would be a key catalyst for the entire telecom sector as well as Indus Tower, to be specific.
Right, but the ARPUs for Airtel were pretty flattish on a quarter-on-quarter basis. So, on that front also we'll have to watch out for, and of course you mentioned tariff hikes. So, that's something that will determine the future trajectory for Airtel. The next stock on my list is Nykaa. Profits saw a plunge of 70% or thereabouts on the back of rising costs, but revenues saw a healthy 30% jump. It's the strong growth in the beauty and personal care segment that drove growth, and contribution margins here has reached somewhere around 28 to 30%, which is a big positive. But what's not done well, of course, is the fashion segment. The marketing spend here in the fashion segment has been pretty high, and the management has something to say about that. She said that higher marketing spends is a function of new customer acquisition. As and when they continue to acquire new customers, that marketing spend will go down in itself. But she does see a very strong possibility of a pickup in fashion business in the coming fiscal. It says, in fact, the management has said that offline business for the Nykaa has turned net profitable in this quarter. So, that's a big positive coming in. And when it comes to the expansion plans, the number of stores they're looking to open in the current fiscal is around 50, a little calibrated because they have already opened 150 stores till about now, right? And the management also clarified about the timing of the bonus issue and how it has actually benefited all the shareholders, because pre-IPO investors also got a chance to exit, and people who had bought the shares post IPO, for them it was not really a risk because they didn't have any lock-in shares. So, that way it was a win-win for all, and in fact in a post-bonus environment, she says that the retail shareholder base has gone up from less than 1% to over 4%, and even when you look at domestic mutual funds and FII shareholding, even that has gone up in the post-bonus environment. So, that's a good thing. But if you look at what the brokerages have to say, most of them have retained their buy ratings, even though they have trimmed their target prices by somewhere around 9 to 10%. But any factors for upgrade would depend on how quickly they turn around their fashion and others business, and if or not beauty and personal care business can report better than expected numbers in the current fiscal. These two factors will determine whether the stock is up for a rating upgrade or not. So, all in all, Nykaa okay show, but the future trajectory depends on how quickly they turn around the fashion business.
But really, the management would always try to defend their bonus issue decision. But what it has done in the process is that the shareholder base has become very large, and the stock price has been falling. Every time the investors in the pre-IPO exited, there was a big downward pressure in the stock, and it hasn't been able to do much in terms of stock price appreciation, because at the end of the day what matters is stock returns for investors, and you haven't been able to deliver on that front. In fact, I was surprised that the company is still remaining profitable in this kind of competitive environment, wherein from Tata's to Ambani's, most of them are looking to enter into this personal care as well as cosmetic businesses.
Management has also said that if they could combat something like Amazon, then competition concerns really aren't that big an issue right now. But if you look at the stock price, over the last week or so, it has been trying to attempt a comeback. So, we'll have to see whether or not investors buy what the management has to say.
Absolutely. And the other stock on our radar is Bharti Airtel. Now again, keeping it with telecom, Today, Bharti was one of the top Nifty gainers. Why so? Because Macquarie does believe that the entire telecom industry is entering into a duopoly, which is between Jio as well as Bharti Airtel. Vodafone Idea has been struggling, and there has been no tariff hike. And what this tariff hike struggle has been doing is that it is further weakening the financials of companies like Vodafone Idea, which would mean that the duopoly thesis of Macquarie would accelerate in the coming financial years. In fact, Macquarie believes that if the two-player market were to seen, then the ARPU catch-up will happen sometime in the future, which would mean that their FY30 estimates could be nearly 35% above the base case. So when it comes to earnings growth, Macquarie does believe that there could be some serious upside to the entire estimates, and they have outperformed rating on Bharti Airtel with a target price of 1,000.
Well, it was among the top gainers on the Nifty in today's session. Well, with that, we've come to the end of this edition of Closing Trade. But of course, we'll be back with the markets tomorrow morning at 8:30 a.m. So don't forget to tune in. But for now, from Yatin and me, thanks a lot for watching.